Hello, in this presentation we will take a look at a vertical analysis profit and loss statement within QuickBooks Pro 2018. If you've been following along with us, we will be continuing with the Get Great Guitar problem. If not, that's okay. We will be looking at a profit and loss or an income statement and a vertical analysis within the profit and loss or income statement. If you have access to the backup file for this data, you can go to the File tab and restore that information as has been seen in a prior presentation. We currently have the Open Windows open, which can be found at the View tab and Open Window list. And we have the Home page open, found at the Company dropdown and Home page. We're going to be starting off with the Profit and Loss report and doing some adjustments to it in order to arrive at a vertical analysis profit and loss. In order to do that, we will go to the Reports drop-down up top, scrolling down to Company and Financials, selecting the first item, that item, Profit and Loss Standard. We're going to change the date range from 01/01/21, January 1st, 2021 to 12/31/21, December 31st, 2021. What we're going to do this time is note that this is going to be our normal income statement. We have the revenue or income accounts, we have the cost of goods sold, and the gross profit and the expenses, and the bottom line, of course, net income. What we want to do now is see this information not just in totals, but in a vertical analysis. A vertical analysis typically comparing everything to the revenue line. So we're going to compare everything on this financial statement to the revenue line. The reason that makes sense in some cases, some way it makes sense, is that we're having a goal of the business of the revenue generation, generating revenue, making money, earning revenue. That's the goal of the business. What we want to do is see how everything else relates to that goal. What percentage of revenue is everything else in relation to the goal of the business, the revenue generation. The revenue also should be the largest number on the income statement, it being calculated as revenue minus expenses. So typically there will be less revenue accounts, but there'll be larger numbers in terms of revenue because that's going to be our major goal, as opposed to expense type items. The goal of expenses are to be consumed to help generate revenue. The only reason we have expenses, of course, are that we are consuming something, we're consuming an asset or incurring a liability with the goal of achieving revenue. So therefore, we want to see what the relationship is between particular expense items and that goal of achieving revenue. In order to do that, we're going to go to the Customize Reports up top, Customize Reports. And we're going to go down to these items down here. Now, we looked last time at the previous period and the percentage change in the previous period. That's a horizontal type of analysis, comparing the change to what happened in the previous period, the percentage increase, and the percentage decrease. In this case, however, we want to see more of a vertical analysis. And in order to do that, we're going to be back over here into the percentage of income. So we're going to look at the percentage of income analysis. Note we have these four items different a bit from these two items. This giving us the dollar change, the percentage change horizontal. This giving us the percentage of income. That's what we'll take a look at. That's what we will be using at this time, and okay. And so now we're going to see that this total income here, that's going to be 100%. The components of income are going to be compared to that 100%. So if we were to do some calculations here, which is always a good time, we're going to take this account, for example, that account right there, get the calculator back here, and that's going to be the 4967.4 divided by the total income of 19275.4, and that gives us the 0.257, or if we multiply that times 100, gives us the 27.77 or 25.8. 25.8, that the item here. Now that's going to be this comparison. We can also do that for all the expenses too. So it's often very useful for us to see how the cost of goods sold lines up to total income. Total income oftentimes being just merchandising income for a merchandising type of company. In that calculation, we have the cost of goods sold at 3950, dividing that by the income 19275.4, and we get that. And if we multiply times 100 to make it a percentage, we're going to say 20.49 or 20.5. So there's going to be that information, and we could do that for all the expenses down here. So let's just pick an expense. We've got this expense selected, the insurance. 917 divided by the 19275. And if we multiply that times 100, we get that 4.8%. So if we go through this, we can really get a quick view at, okay, what's the percentage of income? How important is this to us generating our income? And if we weren't to make a change in terms of trying to increase, in this case, the net income or the loss, what are some of the components we can change? And obviously, if we look at this line items over here, cost of goods sold is high, but it should be high. And it's going to be really high compared to the merchandising sale. But we have some other types of income, and therefore this number may not be as high as it would be otherwise in a merchandising company, which was getting most of its money through merchandise. But we also see that, of course, the payroll down here is 60%, so that's going to be a big line item that we have in our financial statements here. So it just gives us a quick vertical analysis, a quick rundown. These numbers are also numbers that we could compare to other companies in similar industries. For example, if we're a small burger shop and we're comparing to McDonald's, we could not compare the totals in terms of what they spend or what their expense is, for example, on insurance, but we might be able to compare what their percentage is compared to their revenue, or what's their comparison of payroll compared to their revenue, or their cost of goods sold compared out. These numbers here can be comparable to entities of different sizes, and the total numbers cannot be comparable as easily to entities of different sizes. That's why one reason for the vertical analysis being very useful. We're going to do a few more customizations and then export this report by going to the Customize Reports up top. We are going to go to the header and footer, removing the date prepared, the time prepared, and the report basis. We're going to put in the footer Eric Smith for our name there, and that should be it. We'll save that. There's the report. We're going to go ahead and export this to Excel. We have been doing this in the past with prior reports and already have an Excel sheet set up. Therefore, we will be setting this up and exporting it to that same Excel sheet. To do that, we will go to the Excel drop-down. We're going to create a new worksheet, and we're going to put it into an existing workbook, browsing for that workbook, finding that workbook, which is right there. It's already right in the right side. I'm in section 3. I'm going to go right there, section 3. We could select open. I usually just double click on it. And then we're going to select the export option. It should then open that existing Excel workbook that was already there prior to this exporting of this data. Create a new tab within that existing workbook. Once that happens, what we will do is the normal adjustments, which will include pulling that new tab to the end. I want to have it after the other reports that we have made so far. So I'm just going to grab that, pull it to the end, and we're going to make that I'm just going to call it P&L, something abbreviated that will fit there. And then I typically like to go to the top and go to the View tab and unsplit in the Windows pane, unsplit that. Then go down to the page layout down here, page layout view. Take a look at the page layout, see that the title is up there as it should be. It all fits on one page like it should. Looks nice, looks good. So we're going to go back to the normal view here and save that information. Okay. And then we're going to close this report. And that'll be it for the vertical analysis, profit and loss.